Here are the crypto top headlines covered in this video. a16z's Brian Quintenz, top pick for CFTC chair under Trump, says report. Next, French Hill to chair House Financial Services Committee in 2025. Also, BlackRock says 1 to 2% a reasonable Bitcoin portfolio allocation. Welcome to Crypto Top Headlines, where there are no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, a16z's Brian Quintenz, top pick for CFTC chair under Trump, says report. Former CFTC Commissioner Brian Quintenz, now a16z's policy head, is reportedly Trump's pick for CFTC chair, signaling a pro-crypto regulatory shift. Brian Quintenz, a former United States Commodity Futures Trading Commission commissioner, has reportedly emerged as the top contender for the CFTC chair position under the incoming administration of President-elect Donald Trump. According to a Bloomberg report, people familiar with the matter said that Quintenz has been interviewed for the position. Currently, the head of policy at Andreessen Horowitz's crypto division, a16z, Quintenz's background includes overseeing key policy initiatives at the CFTC between 2017 and 2021. The appointment of the former CFTC commissioner could shift the scales in a long-debated jurisdictional lack of clarity over cryptocurrencies between the CFTC and the U.S. Securities and Exchange Commission. Looking for a guy in finance? Quintenz previously served as a Republican-appointed commissioner at the CFTC, advocating for financial innovation within the digital asset industry, and he currently pushes for regulatory clarity as head of policy at a16z. During his tenure at the CFTC, he supported the integration of digital asset derivatives and event contracts into the federal agency's regular framework, focusing on improving innovation while maintaining market integrity. At a16z, Quintenz advocates for crypto regulations that balance scrutiny with flexibility, using his dual experience in traditional finance or TradFi and crypto regulation to bridge the two playing fields. Quintenz's criticism of the SEC. In March, he criticized the SEC for how it handled Ether's status as a security, arguing that the regulator already explicitly acknowledged that Ether is a non-security asset as of October 2023 when it approved Ether futures exchange-traded funds. Quintenz said that if the SEC had any doubt about the regulatory treatment of ETH, it wouldn't have approved the ETF, adding that if it were a security, the CFTC-listed future contracts would be illegal. Since then, spot Ether ETFs have not only been approved, but they have flourished, recording their biggest single day of inflows with an aggregate of $431.5 million pouring in on December 5th. Crypto under the Trump administration. Venture capital firm a16z has said that it expects greater flexibility to experiment amid a crypto regulatory shakeup with the new administration. The crypto company said it is very optimistic about the forthcoming government's pro-crypto political stance, something the crypto industry has considered lacking under the current administration. a16z has been one of the largest investors in the crypto industry, funding hundreds of startup firms, including Maker, Solana, Avalanche, Aptos, Eigenlayer, Lido, Nansen, OpenSea, Coinbase, and more. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, French Hill to chair House Financial Services Committee in 2025. Pro-crypto Arkansas Representative French Hill has taken leadership of the House committee crucial to molding crypto policy in Donald Trump's administration. Crypto-friendly Arkansas Representative French Hill, currently the chair of a digital asset subcommittee, will take over leadership of the United States House Financial Services Committee in next year's new Congress. I am humbled that my colleagues have placed their trust in me to lead the House Financial Services Committee as their next chairman, Hill said in a December 12th statement. He added he looked forward to working in tandem with President Trump and Senate Banking Committee Chairman Tim Scott to bring common sense economic policies that will produce a new era of American prosperity. Like the House Finance Committee, the Senate Banking Committee is another crucial congressional group for crypto and blockchain policy. In July, Scott said he would support pro-crypto legislation and floated the idea of creating a subcommittee focused on crypto if he chaired the Banking Committee. Hill beat peer Republican challengers Andy Barr, Frank Lucas, and Bill Huizenga in a decision at the party's steering committee and will take the gavel from current chair Patrick McHenry on January 3, 2025, when the 119th Congress begins. House Republicans must still ratify Hill's selection in a full conference vote before it is official. The House Financial Services Committee oversees and shapes policy for the entire financial services industry, along with overseeing crucial regulators, including the Securities and Exchange Commission, the Federal Reserve, and the Treasury. Hill formerly chaired the committee's Digital Assets Subcommittee and now takes over from the staunchly pro-crypto McHenry, who announced in December 2023 that he wouldn't seek re-election after 20 years in office. In October, Hill said he was optimistic about a crypto regulation bill and a stablecoin bill could move forward in Congress before the end of the year, but he and Scott now hold more sway to push them through in 2025 if that doesn't happen. The House passed the Crypto Regulatory Defining Financial Innovation and Technology for the 21st Century Act, or FIT21, in May, but it stalled in the Senate Banking Committee, which Scott now will chair. A House-originated stablecoin regulatory framework bill has also stalled after passing the Financial Services Committee in July 2023. Our next top headline, BlackRock says 1 to 2% a reasonable Bitcoin portfolio allocation. The recommendation applies to investors who wish to hold Bitcoin, the asset manager said. BlackRock, the world's largest asset manager, said an up to 2% portfolio allocation is reasonable for investors who wish to hold Bitcoin, according to a December 12th report. The report, which was shared with Cointelegraph and first reported by Bloomberg, says 1 to 2% is a reasonable range for a Bitcoin exposure, but cautions that larger allocations would sharply increase Bitcoin's share of the overall portfolio risk. Meanwhile, a 1 to 2% BTC allocation poses on average about the same share of overall portfolio risk as a typical allocation to the Magnificent Seven group of mostly mega-cap tech stocks in a portfolio comprising 60% stocks and 40% fixed income assets, BlackRock said. The Magnificent Seven includes companies such as Amazon, Microsoft, and NVIDIA. BlackRock manages approximately $11.5 trillion in assets. It also sponsors the largest spot BTC exchange-traded fund, iShares Bitcoin Trust, or IBIT, which holds net assets of nearly $54 billion. Unique return profile. According to BlackRock, investors need to think about Bitcoin's expected returns in a different way. It has no underlying cash flows for estimating future returns. What matters? The extent of adoption. Bitcoin may also provide a more diversified source of return, BlackRock said, adding, "We see no intrinsic reason why Bitcoin should be correlated with major risk assets over the long term, given its value is driven by such distinct drivers. Longer-term BTC could potentially also become less risky, but at that point, it might no longer have a structural catalyst for further sizable price increases," the report said. Instead, investors may prefer to use it tactically to hedge against specific risks similar to gold. The report, dubbed Sizing Bitcoin in Portfolios, was released by BlackRock Investment Institute on December 12th. Price catalysts. Launched in January, spot BTC ETFs emerged as 2024's most popular investment vehicles, breaking $100 billion in net assets in November. These surging inflows from institutional investors could cause demand shocks in 2025, driving up BTC's spot price, according to a December 12th report by Sygnum Bank. Our analysis shows how even relatively modest allocations from this segment can fundamentally alter the crypto asset ecosystem, Sygnum said. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.